Oxy, they partner with Chart, they partner with Lithium Americas, because they take their technology and provide it into the infrastructure that those companies, those large companies, like to build. The same thing with the natural gas. Our folks on the distribution side, the utility companies that provide natural gas to your home and to your business, are really good at infrastructure, right? So you take Cemvita's biomethanation and decarbonization, without getting too technical, decarbonization molecules, bring those into their system, and you get literally a net zero fuel base. And so we think it's important. So the infrastructure for the distribution companies, they are the utility companies that are there. I mean, they have millions and millions and millions and
Yo, this is Christian D. Evans with Journey with Christian D. Evans podcast. Guys, thank you so much for tuning in and listening to our amazing podcast. This is where we reveal the top 1% of business concepts and systems and processes to scale 8 and 9-figure businesses. We interview top-level 8 and 9-figure CEOs, business owners, and amazing TEDx speakers like David Meltzer. We got Nick Cavuto, Pascal Bachman, and so many others. And if you feel like this resonates with you, please share this with your friend, your family, and make sure you impact them as well, because we're trying to spread the message on those that do not know how to scale 8, 9-figure businesses and talking higher level business concepts. So guys, remember, enjoy the episode and be uncommon if you can. Cheers. Thank you so much for tuning into Journey with Christian D. Evans podcast. I'm your host, as always, Christian D. Evans, and we have a very special guest on today because we have heard about making an impact, whether that's ESG, whether that's environmental, whether that's impact investing. And yes, there is huge, massive opportunity for government to, intervene, et cetera. However, there are also massive opportunities for, venture capital, or a lot of startups, or a lot of founders out there that want to go out there and make an impact, and they're doing that, and they see the massive projections and trajectory of where that's headed. And so we're very excited about having the managing partner of Energy Capital Ventures on. Let me just share with you a little bit of his background. He managed venture investments in numerous multi-billion-dollar companies in categories defining leaders, including Coinbase, probably some companies you've heard of, TrueCar, Next Insurance, Care.com, ClearCover, and so many others, with over 20 years of experience in venture capital and financial services, encompassing over $750 million in VC and M&A transactions. He has achieved a top-level investment track record, and I'm so excited to have him on my podcast. Please welcome, like I mentioned, the managing general partner of Energy Capital Ventures, my friend, Vic Pascussi III. How you doing today, Vic?
Good, man. I'm doing great. Thanks for having me. Super excited to be here.
Well, man, I appreciate you just being on. And of course, we're going to dive into Energy Capital, the investment thesis, and your journey and everything like that, which is very exciting to see what's going on there. But I want to talk a little bit about your journey. Okay, you've been in the industry for 20 years. And I believe in order to achieve the high levels of success that you have been able to achieve, right? During your journey, there are certain pivotal moments, right? And yes, there's a lot of failures along that, but I believe there are 2 or 3 or 4 that were very, very pivotal. So if you could imagine your younger self, Vic, back in the day, what were those pivotal moments for you, and what were those lessons that you learned?
I think when I play it back, the biggest lessons I can share with people is that no one should tell you what you can or can't be, right? Because I'm in venture capital, I'm managing a fund, right? But if you look at kind of that quintessential venture capital background, it's not me. It's not even close to me. Like, I didn't come from the right part of the country. I didn't go to the right schools. I didn't get the right degrees. Of all things, I started as a lawyer, as a trial lawyer, with nothing to do with technology whatsoever, right? But from that, then I got into technology with software. I started my own law firm to represent technology companies and investors, always wondering, always wishing that I could get into venture. And then, you play it forward, and that, you wake up one day and like literally you wake up one day and you're managing a $330 million fund. And I think the important thing for people to realize is if you focus on the job in front of you and do the best you can at that job, you'll get to your eventual goal. It might not be I will guarantee you one thing, it will not be a linear sequential path, right? There will be ups, downs, crazy relocations, and things like that, but you will get there.
So let's talk a little bit about this. And I love what you're saying there in regards to definitely the investment banking world. And I see a lot of industries like this where it's very, very tight knit, and
Yeah.
it really depends on that resume build, if you will. So Vic, I'm curious, what kind of limiting belief did you have to adjust? What kind of maybe self-image or self-esteem did you have to kind of reestablish to ensure, like, hey, I know who I am, regardless of that resume, quote unquote, building?
Yeah, I mean, a lot of it I had to get over. Like, I didn't have my MBA. Everybody within venture and finance had an MBA, right? I tried to go back from my MBA after I got my law degree. Just didn't work out. Just didn't make any sense based on where I was able to score, schools I was able to get into. That was a huge limiter. Plus, there is that path where a lot of people go from law to technology or law into finance, but that's if they're a transactional lawyer. At that time, I was not a transactional lawyer. Right. I was not even a litigator at that point. I was a trial attorney. Right. And so completely different skill set, completely different. So I was like, and then everyone you talk to is like, well, you got to stay in trial law. This is what you're good at. This is what you get paid to do. Your career is going well. And I knew in my heart of hearts, as a trial lawyer, I was just tearing things down and ripping them apart and destroying things. And I wanted to create. I wanted to build. I also knew that it was not really satisfying for me to be in this world where I'm fighting and screaming and destroying things. And then I'd go out at night and meet entrepreneurs and investors, and they were actually creating things and building things and were happy about it. So I had to get over those limiting beliefs of I didn't have the right education. I had zero network in this within the technology space as well. So what I did was just build a network, become self-taught in these transactions. And then when no one would give me a job, within technology and the law, because that's what I was going to base things off of, I had to start my own job, create my own fund, create my own firm.
So I appreciate you talking a little bit about this here. And let me ask you this, because those are two different ecosystems, 100%, like you just mentioned, not even relative at all. Now, my question though is, what skill did you learn being a trial lawyer? Were very effective in deploying those same skills in the VC and the banking world?
Yeah, I mean, I think within venture capital, when you're working on deals, so first of all, it's always fun to negotiate with other lawyers when they like want to grandstand and say, well, I'll take you to court. And my quick response is, you've never been in a courtroom. I have. I'm comfortable going there. How about you? So that's always great to kind of fall back on, right? It's really kind of that reality check that people need. So I enjoy that. But I think anything that works on your critical thinking, anything that works on your negotiation as well as public speaking skills, it helps with what you're doing. So within venture, a lot of people don't realize a lot of venture, the only way you get to be a venture capitalist, truly be a venture capitalist, is to go raise a fund, right? You have to go raise money from other people. So you have to sell to investors to give them money for your fund, right? And so if you're used to selling to a jury, if you're used to selling clients and building a book of business, which I had to build a whole book of business. I had no clients, no connections, no staff. And then I built that up to enough work to keep 5 lawyers busy, doing nothing but technology work. So you have to take those skills in sales, in speaking, in analysis, in negotiation, in networking, and then you brought them to venture. And I think you could do it a lot of different ways too. You can use sales, you can use media, you could use media training. It's a lot of skills are there. It's just making, like, you got to go in and do the work.
So you went out there and deployed these skills to be able to now raise a lot of capital. Like you mentioned, there were a lot of things that you had to learn throughout the way, of course. And maybe you didn't know the terminology, the vernacular, the industry kind of conversation, if you will. And you had to establish that. And I'm curious, because I would imagine psychologically there was a hurdle in your head that said, oh, I'm not familiar with this industry. And I'm talking to an investor that maybe has been in this a lot longer, and they're looking to deploy capital with me. Well, why should they, right? And why would they? We're start out, et cetera, et cetera. I'd love for you to just talk us a little bit about, obviously you mentioned a few skills: sales, marketing, the ability to speak, confidence, right? That comes into it. So what allowed you to convince those individuals? Or is it just mainly building relationships, just having a conversation, and they knew, like, and trust you, and that's the reason why? It wasn't more of that vernacular and all the other fancy stuff.
I think, by the time I was actually out there raising my own fund and for Energy Capital Ventures with my partners. By the time me and my partners were out there, I'd already done hundreds of millions of dollars worth of transactions. So it was a lot easier to be verifiable and credible in those conversations. But the reality, each and every one of those yes decisions we got from investors turned out in trust. It's a trust factor. So do they trust you? Do they think you're authentic? Are you somebody that they can give their capital to, trust to be a good steward of it, and provide the value back? And so we have a little different model here at Energy Capital Ventures, and we can talk about that a little later. But that was really the goal. When I first started in venture capital, I actually started on the corporate venture capital side. So I worked inside a large financial services company and basically aggravated them and instigated them to start doing venture capital in the corporate venture capital context. And a lot of that was, I was able to get that trust and establish that trust because I was so familiar with the startup world and the technology world, having spent 10 years before that in that space. It was working that hard in those earlier days of my career, building a law firm, working inside of software companies, raising capital on behalf of software companies, managing cap tables, that when you go to the C-suite of a Fortune 100 company and say, I'd like to make this investment, and not only that, I think we need to have our own fund. If they trust you and believe in you and you've done the work, that's, you can get the yes. And the reality is, a lot of people, you have to be willing to do the work. Like I had a day job, but I had to learn all of venture capital and private equity, right? So like day job went from, 8 to 6, and then 6 to however late it took. You had to do the work, do the reading, do the research, do the analysis, learn kind of the deal structures, and spend some time then during the day doing the work, doing the actual deal work.
What would you say the spending, I don't know if you look at your calendar holistically with spending the time adjusted, looking at the deal flow, as well as, building those relationships and kind of, continuum. What did that look like? Did you do 50-50, or was it like a 30-70 split? Or I'm just curious, what was that?
I think earlier on in my career, it was all about networking, because what I realized is, and I was really upfront with that I couldn't know everything, but I could know a lot of people. And if I was good to those people, they would share with me what they knew. And if I was helpful to them, they'd be more than willing to share their lessons learned, their technical skills with me, which really accelerated my learning curve in a lot of this.
Was there a mentor that came alongside you to help you facilitate this confidence, this self-esteem, this desire for more, of course, as well? Or where do you think that came from? Was that just kind of innate from your younger childhood?
It's an interesting thing. So I spend a lot of time mentoring people, different folks, and I've never had a mentor. Like, everyone's like, oh, tell me about your mentor. I was like, never had one, not even close. I couldn't even create one in my head. Like, I can't even give you a story about like something like that. It just wasn't how I came up through the ranks, and how I built my career. I think that was, at the end of the day, probably to my disadvantage, because I tried to learn so much from so many different people, but I never had that one mentor, that one guidepost.
Okay, well, that's actually, I appreciate your honesty in that, and so that's very fortunate. So let me ask you this: for those, because you do focus on, we're going to dive into here energy here shortly, but for those that want to get mentored, I always love, and I've asked this numerous times, but I want to get your perspective on this. How do you optimize the mentor-mentee relationship, right? Because I think so many of us, we don't know how to really optimize it, what questions we should be asking, how deep should we get into it? Because yes, you're spending time with like someone like that wants to reach out to you, Vic, and it's like, okay, how do I optimize that person's time in a very effective way?
Yeah, I think the best mentees that I've worked with always came with a plan. Like, they always had a set of questions or issues they want to discuss. And the best mentees I've had realized the things I could mentor them on were the things that they weren't innately good at. So there was this great balance. So they were, one example, they'd be highly technical in product and in technology, but they needed help on the strategy and the business development and some of the big picture vision things. And that's where I was able to help them out. And so finding the right mentor that can give you what you actually need to balance out where you're at in your career and where you need to go in the next, I would say, year to 2 years, that's the first and foremost, probably the most important thing, to find that right type of mentor. And then once you're in that relationship, have some structure to it. Let the mentor know what they need to bring to the table to help you with. And as the mentee, come with an outline on things, or some type of structure to make sure you're making the optimal use of your own time and then the optimal use of your mentor's time.
Yeah, I always find this interesting because I've had some mentees that I've worked with, and I found it so interesting because it's almost like I have to coach them on how to optimize that relationship. Right? You shouldn't be just texting just for the sake of texting. You want to make sure when we spend 30, 40 minutes, whatever, you want to come in and have that conversation. And that was the same thing that I was never coached on how to have, respect a mentor's time as well on those that want to be. So I appreciate you just talking a little bit about this. So I want to dive into Energy Capital Ventures. You guys have some really cool theses. Oh, go ahead. Go ahead. I saw you want to say something.
I think like for some of the mentor-mentee relationship, sometimes it's not really on a substantive area, right? There are some mentees I've had in the time that it was really just about leadership development, personal development, and just helping them out, excuse me, kind of more qualitatively on the leadership side than it was any particular subject matter. And so that's part of picking the right mentor as the mentee to say, okay, who's a person that can help me in this right here and right now and what I need.
So in your life, you didn't have that, or you didn't seek that, I should say. But I would imagine you have probably some friends or maybe coworkers that I always love to call they're brutally honest, right? They want to brutally, share with you the truth, not to hurt you, but to, help you.
Yeah.
Did you have those kind of people in your life, and who were they?
Not necessarily, but what I've done in my kind of team building and culture building for our firm and for every highly performing firm I've been with, there is that just type of, like Ray Dalio says, radical candor, radical openness, where everybody gets to check everybody on things. And everyone has to understand, and that's part of the mentoring teaching process. Like, great, come at me, bring everything you don't like tell me about it, but be ready to back it up. Like, people need to understand, a lot of this, if you like some of the books of Patrick Lencioni, those fundamental things of trust is letting everyone know what you're good at and what you're not. So then you can hold folks accountable to those things, but that it's like conflict. I come from a background in combat sports. We say around here, fighting solves everything, right? But it's the fighting that's founded in accountability and trust, and not stupid passive aggressive behaviors or personal attacks. It's like, Vic, here's where I think you went wrong in this conversation with this entrepreneur. Here's what I'm thinking. I was like, great, you're right. And then other times people would be ready. Like, I'll go check people and they'll be like, yeah, Vic, you're wrong. And here's why. And I'll be like, yeah, right. And that's why you have to have those, set that standard about, openness and conflict and fighting, solving everything, but it's got to be healthy, right? There's lots of big corporations out there and even small corporations where that passive aggressive kind of personal attack, it's just part of their culture. And it's not about, any conflict should be about furthering an individual, and even furthering an individual, it's furthering the company, right? It's not just about being right. Being right doesn't necessarily mean you're effective or helping your team or your company. So long as there's a bigger picture in there and it's not about people's personal gain, I think conflict is the healthiest way for organizations to operate.
Oh, I love that. And putting the ego aside, and it's not about, our kind of, back and forth, et cetera. It's about the bigger vision of what the company's going for and accomplishing. And I'm curious, during your journey, where did you learn that from? Was that just always innate, or did you learn that from a skill in the trial court, or because you're really putting your emotions aside and you're creating maturity, but you still want to embrace the conflict and you don't just put it under the rug. So I found that very interesting.
I think I learned from negative examples. Like, if you think about law firms and big law firms, they're atrocious at culture. They're atrocious at team building. They're atrocious at any type of kind of positive environment. I mean, it's just not good at that. So I knew once I had my own company or my own firm or my own team, I wasn't going to do that. It just wasn't going to be like that. And then I was like, I knew how I wanted to be, but I didn't have those right frameworks and structures that were in things. So that's why I did a lot of research on leadership, like Patrick Lencioni's books. I thought were exceptional for those types of things because it gives you a structure on meetings and on conflict and on team optimization. And that helped me kind of put things into like a mental model, if you will.
I just think it's cool to share that. And I know we could talk about leadership here quite a bit. It sounds like we vibe on that. I just think it's a cool culture you've been able to establish and really been focused on. You've had bad experiences. And so you're like, hey, I know exactly what I want, but I don't know the methodology, but being able to implement that, and you've done very well for yourself. Now, Energy Capital, I want to loop into this here because this is just, to me, I love these kind of industries. One, because, you know, I may not be like a tree hugger, if you will, but I love innovation, right? And I
Right.
love the ESG side of things. I love impact vesting because I do love when I see a founder that just has that passion, that drive. So before we dive into that investment thesis, because you guys have been able to take some really cool portfolio company here, but tell me where the drive came in within you during your journey. Where did that, like, hey, all of a sudden it wasn't just about raising capital, it was about something bigger.
Yeah. So for me, everything's got to be about a bigger purpose and a bigger why, because what I've learned along the way, I've seen it in myself, I've seen it in other people. When you're doing something just for yourself or your own personal gain and your own personal accumulation, you'll fail at best. You'll end up with a hollow victory. More likely than not, it'll just be a failure, right? So for me, and I think for most great companies that are out there and leaders, it's got to be about a bigger purpose and a bigger why. So, you know, I started my career in venture capital, if you will, in fintech and Insurtech. And I started there because to me, everything was, when I looked at financial services, and financial services to me were fundamental to the core of communities and families and in the livelihood of individuals. Like if you don't have financial security, it can wreck your family, it can wreck your community, it can wreck your business. And so I looked at the current financial environment that the traditional institutions either overserve people, underserve people, or unserve people. But I knew technology could be this great equalizer to bring financial security to everybody, no matter what your income level was, no matter what your personal goals were. So that's what really attracted me to be a fintech investor and get me involved in companies like we talked about, Personal Capital, Coinbase, even TrueCar, and those types of companies. When I was looking for my next opportunity, once I came out of financial services, you know, I just spent the time talking to some friends on things, right? And then I, at the time, would only see things through my fintech lens. And of course, fintech was fundamental to society. It was, this is like the greatest game changer. And I'm like, well, you know what? If people don't have energy and they can't turn on the lights, and if they can't fuel their businesses, and if we don't clean up the environment, that's even more fundamental to this world and to these companies. And there's lots of people pursuing other strategies around climate. And I think they're completely missing the boat on what's really can happen and how important that natural gas ecosystem is. And so by talking with people and talking with the executives at our companies that we've invested in, and then our broader network, and to a lot of entrepreneurs, I saw this great unserved need and this bigger purpose that's out there that a lot of people are glossing over and missing. Now, because of what we're doing, people are spending a little more attention to it on it. So that's fine. It's good to see some other people come into the fold. Competition is always great. And, you know, it was just, what was the biggest benefit I could provide with my time here? And it was another fintech, another Insurtech fund, and there are plenty of those. And there's a lot of great folks doing that. And then we looked at the opportunity within power and utilities and realized no one's taking care of or looking out for the future of the natural gas industry. And for an industry that provides clean, safe, reliable, cost-effective energy to millions and millions and millions and millions of people, and millions of businesses, someone's got to be out there leading the charge for them, helping them understand technology to future-proof their business.
Let me ask you this. So we're talking a little bit about this industry here and the impact of it. And that's why I think it's so fun just talking about the bigger vision behind this. Now, when you guys are looking at the kind of the structure, because I understand that some of these startups and some of this in this industry, the VC world, you guys focus on, I believe what I saw here, Series A. So what that means is that there is some sort of value prop. The proof of concept already been pretty well established. They probably have some revenue, maybe letters of intent, et cetera, established. And I'm curious how, when you look at a deal, because I would imagine you probably get tons of deal flow, definitely in this industry. First of all, tell me the vision of what this looks like in regards to, you know, how much capital is actually being deployed in this area, because I do know a lot of capital right now is being deployed in SaaS and, you know, obviously other industries and, you know, fintech like you mentioned, and biotech, et cetera. But I'm curious how much capital out of all holistic, you know,
Yeah.
capital is being deployed in this industry. Is it like 2 or 5%? And then as well as tell me a little bit about what you guys look for into identifying, hey, this is a good investment. Is it the founder? Is it the financials? Is it kind of the proposition of the market? What does that look like?
Yeah, so I think I'll be directly correct on this because I didn't go back and check my facts, but there is something like $65 billion in venture that's been allocated to funds focusing on climate and ESG, right? So there are huge funds out there. There are tons of individual funds, as well as I would even say private equity folks that are now doing venture as well, focused on this area. So it's huge. It's actually overtaken fintech as far as dollars that are allocated and the investments that we're seeing. So it's really, you know, an emerging growing area. I mean, you even saw Larry Fink with his latest comments that, you know, the next 100 billion, the next 1,000, I think he said, billion-dollar companies will be in the climate and ESG space. So, you know, that's kind of the future that's there. That's why we're excited about it. When it comes to evaluating an individual investment opportunity, I kind of look at that. I look at them the same way I looked at deals throughout my entire career. Because we're at that earlier stage, that Series A, and it's like Series A and a little bit before. So we want to see someone that's built a product and has some market traction. And that market traction varies, but it's usually not much more than a couple customers, or they're in that LOI stage, or people are talking about deploying their technology. So that's where we're coming in that. Because we're coming in at the earliest stage, the most important thing to me in investing is team, right? There's nothing more important than the team, because at the end of the day, we're asking and expecting these companies to do unreasonable and heroic things. Like, we want them to go from literally no enterprise value to billions of dollars in enterprise value in a relatively short period of time. Completely unreasonable. But the only thing that gets you through that is teams. It's the team that can motivate and inspire customers to take money out of their pocket and give it to them and pay for them. It's the teams that, excuse me, that inspire other employees to come leave the job they're at and come work for this company. It's the team that then inspires other investors at the later stage to entrust them with larger pools of capital than what I'm able to deploy. And it's the team that always is the ones that can work through those things which are completely outside of your control, right? Because no matter what we do as investors or as business owners or operators or entrepreneurs, you plan for as much as you can, but the things that come from out of nowhere that wreck your business, they happen. They happen to every company. And it's going to be that great team that's then going to overcome those obstacles, overcome those challenges. And you can't quantify that. You can't put it into a model. You can't describe it, because the stuff that happens to a startup as they're going through those earliest stages is like nothing that you can really expect. So team, first and foremost. Technology, I want to see some industrial strength tech being built. Market, I want to see them going after a huge market so that it can support a billion-dollar company. So it's team, tech, market. We like to say competitive advantage, if not unfair competitive advantage. Like, if it's worth doing, other people are going to do it. So why is this team going to win versus any others? And we have to be able to clearly articulate that before we're cutting a check, right? So everybody's got to see that. So team, tech, market, competitive advantage. And then, you know, I want to make sure it's a team and company that's a good fit with our fund, with our firm, and with the individual partner or myself that's going to be on that board of directors, and going to be, you know, at the end of the day, kind of married to these companies for the next 10 years. So, you know, and all are equally important. Like, if we can't find a fit, it's not going to work, right? We're more than just capital allocators. Like, we're in there building, advising, motivating, helping grow, and helping accelerate revenue. So it's definitely interesting. It's more than just, you know, like I said, cutting a check and not talking to people again.
So let's dive into each one of these, and I love it that you kind of push them, built that foundation with the unfair advantage in the marketplace. I was talking to a friend of mine that he is in PE world, and I thought it was really cool what he said, and we use this in the marketing world a lot, where they said we don't want to just sell vitamins. We want to make sure that we're finding a company that's going to sell that pain, that really massive difficult pain.
Sure. Yep.
Now, with your analysis and your data, then what does that look like? Because we see that contextually, like people, I hear that and it means something different to me than it means to you, but you obviously are looking at the data and saying, okay, this we see is solving a massive pain in that industry specifically. And yes, they got some revenue, cool, wonderful, and we could help them really scale out. What are you looking for? And I know it's very contextual, like that question is very contextual, it's really dependent, but I just want to ask, are there certain baseline methodologies that you look at and say, okay, we can identify that the trajectory, this is $100 billion market, and our potential behind this in acquiring, maybe 15, 20% of that, is huge, right? Whatever that looks like. What are those things that look into to create that unfair advantage that you guys see, like, okay, I see this?
So using your friend's analogy, the way we look at that is individuals, consumers, corporations, agencies, whoever it may be, they're only willing to part with so much money for a pain reliever or a vitamin, right? And so that because of that limited dollars they're willing to part from, there's a certain margin compression there's a commoditization, and probably something that over time just kind of, not sputters out, but doesn't hit the growth trajectory you want. However, if you're selling a cure to a real problem, or you're creating a market for people that they didn't even realize ever existed, that's when people and corporations part with large sums of money and you become ingrained in their daily life. You're not a nice to have, you're a must have. So that's how we look at things. And kind of going back to some of my earlier comments, like, be clear, I am more of the qualitative investor. Like, that's why I have really smart people on my team that are highly quantitative, that like, I know what I want to see in a model and a number and how things come together, but I can't do them. And so I want to see, what does the math look like between what I want for a game-changing, category-defining market leader that's either solving a huge problem or creating a new market opportunity, and what that model should look like, and what I think are reasonable assumptions or unreasonable assumptions to get there. And that's when I'll dive into it. So so I don't have like a spreadsheet on this or anything like that. I regularly say that, like, if the answer were for venture capital, if the answer were in the numbers, I would hire spreadsheets and not people, right? But that's why I think I hire and partner up with really good people to bring it together, because that's what makes this business work.
Yeah, okay. And I appreciate that. Because I do know that like, there is no just like, cut and dry and paste, whatever. Now, I've heard this definitely in the VC world. You guys do rely on the founders and the team quite a bit, right? And analyzing that. What do you look for in those founders? Is it more of like, hey, they've had an exit in this industry before, they're very familiar with it, plus their ecosystems well set? Like, what are other things, or maybe it's more of the characteristic or the personality traits that they possess, that you're like, okay, hey, this person has the it factor, if you will, that, like you mentioned, ball comes out of left field. Okay, shoot, how can we adapt and adjust and overcome whatever that situation is?
Yeah, I mean, certain individual indicators like prior exits, prior career successes, those are helpful. But for me, I'm looking for that leadership attributes. And I think the important thing, and what I try to teach everybody around me, is that different leaders can be successful in all different ways. Like, there are the leaders that are the charismatic sales deal-oriented folks, and that's great. They can freaking win. But you know what? I've worked with some folks that are more introverted, highly technical, product-oriented CEOs and leaders, and they freaking crush it too. People love working with those types of folks, and they knew how to bring other people around them to complement them in different things. So everyone's got a font when you're, at least for me, when I'm evaluating these leaders and these teams, like, after doing it this long, I know people will do it in completely different ways. Like, some will be market focused, some will be product focused, some will be more sales and business development focused. And that's okay. There is no right or wrong leader. Like, there are leaders that can light up a team and make them get to the next level or levels never even thought were accomplished or accomplishable. And they're as shy as the day is long, right? But they do it in a different way because of their technical prowess, because of their product understanding, right? And so it's just a matter of finding the leader that has the attributes that works best for them and that they can capitalize on.
There's a lot of validity in what you just said, because I had a guy on just recently. He was an author of The Founder, which he interviewed all the PayPal people that were involved in that whole structure of it. And some big names came out of that. And what he was basically saying is, he said, how each one of them had their own different personality traits, but they went on to achieve really incredible successes. And so, like you mentioned, it may not be that charismatic, whatever, right? What we always think about, but sometimes it may be just that engineer kind of brain, but they're really amazing at that product, engineering on the back end. But man, they build billion-dollar companies like Max Levin. So let me talk a little bit about, I want to talk a little bit about mitigating the loss. So when you acquire these companies, like you mentioned, it is a 10-year structure, right? Focusing on helping them structuring that out. I'm always wondering, how you're able to be in a situation where, okay, I understand the VC model. Definitely with a Series A, it's a little bit more like risk adverse, right? Where you're able to ascertain and identify a little bit better. But what are certain things that you do as a company, as a VC firm, to really mitigate that loss and to really put your eggs in the things? Or is it more of like, hey, we're just kind of shooting roulette out here and seeing who wins? And sometimes it surprises you with which company, which founder really takes off.
I think a couple of things that we should unpack in there. I think at the, C plus to Series A, where we're at, it's really not about mitigating risk. It's about embracing the risk that's there, understanding it, embracing it, and making sure that the payoff at the end is worth the risk you're taking now, right? And that payoff, like, I need companies to be worth billions of dollars, not tens of millions, not hundreds of millions. So it's about, making sure that risk reward ratio is there. But when we're actually picking the companies and deciding to invest, like, what do I think our fund, what can Energy Capital Ventures, what can I do individually, as well as my partners and investment professionals, what can we do to enable those successes? What can we do to help them with revenue acceleration? What can we do to help them with business development partners? What can we do to help with them recruiting? What can we do within strategy? Like, are we the ones that are going to able to be that force multiplier, if you will, for these teams that we're backing, right? Because I say this regularly, even in our staff meetings, like, great founders can get money anywhere. Well, why do they need ours? What do we bring into the table, right? And so what we're looking to mitigate that risk is saying, what can we do as investors to ensure, or you can never ensure it, what can we do as investors to help enable the success of these companies? And it better be more than just cut them a check, right? And, whether it's our own individual experiences or networks, like, what is it that we're going to do to kind of hit on those metrics that are there?
I love that, because like you said, there's so many things that, I've talked to some investors and they just write a check and they're very passive, but it's also like, you want to always engage with those that are very active. Like, hey, we're writing a check, $500,000, but cool. What else can you bring to the table? Your knowledge, your experience, your expertise, your ecosystem, like you mentioned. I'm glad you mentioned that. That's what really helps you stand above the crowd. And let's talk a little bit about this, Vic, and I know it's contextual depending upon, but what have you identified as like one of the leading things that majority of these companies, these startups need help with, outside of just the money?
Excuse me. I don't know that there's any one thing that I'm seeing. I think thematically, what I'm seeing, or what's trending a lot now within deals, is helping a lot of the entrepreneurs that are coming through today, because it's just the era they grew up in, and because of their age group and their experience bracket. Like, they've never seen a downturn. They never saw the carnage in 2000. They never saw 2008, 2009. They never saw venture capital evaporate from the system, or corporate venture houses just shut their doors, right? And so I think a lot of it is providing perspective to these entrepreneurs what it means to go through a down cycle, how to get out of it, but then also providing them some market intel, like what is the right go-to-market and right product roadmap based on where you want to go, right? And if you put a challenging macro environment, let alone micro environment within VC, what does that mean for, excuse me, how you allocate capital and how you allocate your resources to hit your metrics, to show that you've got a strong, viable, strong game-changing business.
Well, this is very interesting. Let me ask you just on a side point here, because this industry is, it's in the political game, and when anything, you and I know, when anything gets political, the logic almost goes out the window. So, and we're not going to talk politics, but I'm just curious, with this kind of investment strategy, do you find that sometimes you're almost trying to fight against whether it's local government, whether that's holistic government, whether it's different governments throughout the world, or is that not really a factor when you're looking at disrupting the businesses that you have?
No, with especially on the ESG side, and we should get into energy capital ventures a little bit more after that. Especially on the ESG side, both the federal regulations and local regulations can either accelerate innovation, impede innovation, or just be a non-factor, right? There are certain state and federal regulations that are out there that will get in the way of hydrogen as a clean energy source that's out there. There are economic incentives that will go towards, at certain states, electrification to the disadvantage of things like renewable natural gas. So, we spent a lot of time talking to regulators and policymakers about the importance of this industry and what it means to communities and families everywhere and businesses, and how it's not just part of an energy transition, it's part of the energy future with both its infrastructure and its current products, as well as the products that it has for the future. And so, we spend a lot of time and the reality is, policymakers unfortunately tend to be uninformed on a lot of these things. So we try to sit down, explain the case, and it's hard, especially within the ESG space, like it's become religion for people. So it's beyond facts, it's beyond politics. It's just become like, this is what I believe in. I don't care what your facts say. I'm going to create my own facts. Right. I don't care that wind and solar is only 2% of all the energy produced. It's the future, even though it's sucked up trillions of dollars in government subsidies to get to where it's at. So, not that we're anti-wind or solar, but we think it's going to play a certain part, but not be the solution for everything, just by example. So, yeah, I think part of being a good venture capitalist is understanding reality, which a lot of folks on the coasts don't understand the reality of what's happening here in kind of the middle of the world. And part of that reality is working within regulatory frameworks and understanding regulation and what's going to be supportive of the future and what's not going to be, and how do you adjust or adapt and understand what's going on there.
So this is good. I'm glad you brought this up, because I want to make sure we differentiate this for our audience, for those that understand exactly where Energy Capital Ventures, where you guys focus on. So I'm going to read something here on your website, and I'm going to let you just kind of run with it and wherever you want to go. So environmental, social, and governance, for those that are listening, that's ESG. That's what we've talked about quite a bit. Many of you have probably heard that. Energy Capital Ventures, we are investing in companies and technologies advancing carbon culting priorities to make natural gas even more sustainable, like enable consumer fuel switching in buildings, utility of the future, power to gas, renewable natural gas, hydrogen, like you mentioned, ESG accounting, methane capture detection, energy efficiency, et cetera, et cetera. So I'd love for you to just kind of unpack that a little bit more at a micro level, allowing us to understand that thesis. Because like you mentioned, you did say solar, and a majority of us, we just think that stuff, but you're obviously at a kind of just a little niche in the ESG world.
Yeah, so I think it's kind of good to understand kind of our broader perspective, and then we can dig into a lot of that. So Energy Capital Ventures is the only venture capital fund dedicated to the ESG imperatives and digital transformation of the natural gas industry. In addition to that unique thesis that causes us to be advocates for innovation in what we call termed green molecules, we further differentiate ourselves with a customized engagement, and a deep integration with our strategic limited partners, all of whom are publicly traded utility companies. It's that model that enables us to provide a platform of innovation, to take the best of the innovation from the technology world, combine it with the scale of the utility industry, in order to ensure that businesses, individuals, communities everywhere continue to have clean, safe, reliable, cost-effective energy, right? And so getting more into the individual technologies and unpacking those things, electrification has a part in decarbonization. Absolutely. Within ESG, on the E in ESG, the environment side of things, decarbonization is clear. Greenhouse gas reductions emissions are clear. But E also hits the S, right? There are certain, and not every community is going to be built for solar panels and Teslas, right? It's just not going to be. Like there are low-income communities that are in the cold weather environments where electricity cannot and will not provide what they need for heating their space or their water, let alone fueling the businesses they go to work in, right? And so we think there's plenty of people out there with the electrify the world thesis that are chasing it. Nobody's looking at the natural gas infrastructure and the importance of the energy sources it provides now and in the future to provide a low carbon solution to help reduce greenhouse gases and decarbonize. I mean, the reality is natural gas has done more to decarbonize this world than anything, right? People are able to get off coal and go to other fuels, clean burning fuels like natural gas, because they were there for them, right? And that's why natural gas is an important part of the solution. And it's that infrastructure that can provide, also bring in renewable natural gas, hydrogen, low carbon intensity fuels, and things, right?
Let's talk a little bit about the infrastructure. Where's that at right now? Maybe just like, let's just take US, for example, infrastructurally. Are we prepared, or do we have that infrastructure in place so a lot of these startups can really, really be able to grow? Or do they have to kind of build the infrastructure out first and maybe collaborative partners, et cetera, to be able to help facilitate that growth?
So part of the infrastructure is there. The IRA has some elements to help nurture some of this infrastructure along, especially within renewable natural gas and hydrogen. It provides certain production tax credits and investment tax credits for these companies to do it. But I think the smart companies are like the ones like Cemvita Factory, our portfolio company, that's taking their innovative solutions within synthetic biology that decarbonize those heavy industries, and then they partner with large industry players for those capital investments in other infrastructure. So they partner with United Airlines, they partner with Oxy, they partner with Chart, they partner with Lithium Americas, because they take their technology and provide it into the infrastructure that those companies, those large companies, like to build. The same thing within natural gas. Our folks on the distribution side, the utility companies that provide natural gas to your home and to your business, are really good at infrastructure, right? So you take Cemvita's biomethanation and decarbonization, without getting too technical, decarbonization molecules, bring those into their system, and you get literally a net zero fuel base. And so we think it's important. So the infrastructure for the distribution companies, they are the utility companies that are there. I mean, they have millions and millions and millions, and I should have this number, 18 million miles of pipe that are going through this country to provide that last mile of bringing the gas into your home. They're making enormous investments, millions and millions of dollars a day, in upgrading their pipes and coming in with pipes that do not leak, that capture the methane, that are enabling, that have the ability to then bring hydrogen in as well. And so they're making a lot of infrastructure improvements when the regulators allow them to, which is another thing, which varies state by state. And then also and let them recuperate a lot of those costs and investments in their business as well. So that innovative technology companies that come up with the newest renewable natural gas production method or optimization can then bring that into their distribution center, as well as those companies that are out there with what I would say the picks and shovels around these things, the technologies that work with big anaerobic digesters, or they work with electrolyzers, or they enable new membranes for the next version and step function increase in gas separation, that they can work within that infrastructure that's there.
So this is really good to know. I was not aware, because I do know like a lot of industries, they need that infrastructure established, whether that's through, political governance or whatever, to be able to obviously, help facilitate that, because otherwise these startups really have to rely on building that infrastructure itself, which is very costly. So it's really good to hear that news. So then that go-to-market strategy when you work with a startup can be very, very quick, because, well, they've already got that infrastructure established. Then let me ask you this in regards to, why do you think the adaptation toward this, if like just what you mentioned, all these factual evidence of saying, okay, hey, this is a better strategy in regards to cleaner, et cetera, whatever, in the ESG world, why do you think, maybe politically or maybe just like, culturally, we have not adapted to that as quickly? Is it just lack of information, or is it just lack of opportunity, or given the option to do so?
I think there's a lot of bad information out there, and there's a lot of politics and, if not zealousness that's in there. People think, well, coal is bad, so everything from fossil fuel is bad. Well, that's not really the case, right? It's like factors of 50 worse, right? Not even on the same page. The other reality is a lot of people are just uninformed where their energy comes from. They think electricity just comes from the wall. The reality is most of that electricity is still being generated from natural gas powered plants, or in certain parts of the country, it's still powered by coal. On top of the fact that China will burn more coal this year than the US has burned in the last 15 years. And India will burn more coal this year than they've had in than US has done in the last 15, right? So helping these companies and these technologies expand both overseas and here, so that countries like that don't have to burn coal, is really important. And so that's part of natural gas, the natural gas infrastructure that can do clean natural gas, maybe hydrogen, or definitely hydrogen, and renewable natural gas. So I think people have become desensitized, if not brainwashed, that, oh, if it's a fossil fuel, it's bad. Well, not really. And we've seen what happens when people over-index on a certain type of energy source, right? When the wind doesn't blow and the sun isn't out, we saw the disasters that happened in Texas a couple of years back, right? Where people actually died, right? And that was with them not allowing. Now Texas has definitely done the about face, and they're promoting natural gas and new pipelines and those types of things. But when, like I said, if it's 0 degrees out and it's dark and the wind's not blowing, you go to heat your house, it's not going to happen, right? If you're relying on wind and solar. That's why you need other elements to help that. And then you also need natural gas to power the grid, because the grid itself is having trouble meeting one peak, because we've seen what happens with forest fires and brownouts and blackouts. What's going to happen if you take natural gas away and that infrastructure has to deal with 2 peaks, both the summer and the winter, right? That will be atrocious for a lot of communities.
Man, you're making me laugh over here with what you're saying, and it's so true though, because I am also in ignorance in regards to obviously this strategy, and that's why I appreciate just being on here and unpacking this for our audience and for myself as well, and just sharing the opportunity. I want to talk a little bit about the untapped potential. So we talked obviously kind of the hurdles, the frustrations. What's really good news is what you just mentioned, Vic, is the infrastructure is there. It's just the lack of information or the ideology that gets in the way sometimes that prevents us from realizing that there's another opportunity here. What is the untapped potential with this industry? Because you mentioned, like you said, which is really good. I didn't know so much money was actually being deployed into this industry, which is fantastic, which means very, very big improvements, a lot of environmental innovation, and which is always wonderful. So what is the untapped potential for this industry that you're seeing right now because of the convoluted or miscommunication in this?
I think the untapped potential is around, a lot of it's around upgrading the infrastructure we currently have. So how do we upgrade that infrastructure in order to make sure we don't have methane leaks, that we have accurate methane leak detection, so that we can solve to those issues. Second of all, I also think that we need, what I'm really excited about is those next generation membranes that are out there that can provide for direct air capture, that can provide for natural gas separation, so you can do natural gas and hydrogen, that can provide for kind of the cleaning and cleansing of fuels that are out there, as well as those other technologies that are coming to this industry within synthetic biology, like Cemvita Factory, that are making just a better, that are actually decarbonizing the hard to decarbonize. Like everyone wants to decarbonize, but they want to do it where the carbon isn't in the first place. Well, if you want to decarbonize, start where the carbon is. That's how you decarbonize, right? You start with aviation fuel, plastics, oil and gas. Those are the game changers, right? And so that's where I see a lot of opportunity. I also think on the digital transformation side, and why I like the companies I'm working with now a lot, is that they need help. They're all on ESG journeys, but there's yet to be that software that comes out to help them do the planning, help them understand their emissions, understand their environmental footprint, understand their land use, water use, wildlife impact. There's nothing out there that they can rely on and go to. Like, you just can't go to IBM and be like, oh, what's your ESG package that you have for my publicly traded, Fortune 100, Fortune 500 company? Like, that doesn't exist. Like, you're not going to go to SAP or Salesforce to do that, right? So these new startups that are out there that are coming up with these ESG modeling platforms that are enable people from the kind of to the farm, at the farmer, all the way to the CEO suite of large textile industries, to understand that footprint and that roadmap and make decisions on how to limit their environmental impact or eliminate their environmental impact. That's what we think is just a great untapped area that we're excited about as well.
I love it, man. This is exciting stuff because, again, I'm a big innovator and I believe in entrepreneurs and, VC, firms like yourself that come in and be able to deploy capital and help them come alongside, not just deploying a check, but also just your service, your ecosystem, your investor, your experience, and helping them really scale to that next level and really sharing the message. And Vic, I really appreciate you being on today and also just being on the forefront of this, like you mentioned, definitely in this space, in this niche. I think it's very exciting stuff happening. Vic, for those that want to, get more involved, more active, want to get, to learn a little bit more about what you guys got going on, how do they reach out to you, my man?
So, our website has a lot of great information on it. We publish a newsletter every 2 weeks that has our perspective on things, and we try to educate as well as provide some perspective. I'm active on LinkedIn and Twitter. People can catch up with me there. It's always easiest to connect with me via a mutual connection. Like, that's always super, it just helps kind of understand everything that's out there, because there's so many people, right? If there's someone that I know that can help facilitate things, it just helps me get the people a lot easier. But like I said, website, you can contact us, follow the stuff that we're putting out there, Twitter as well as LinkedIn.
Awesome, guys. Those links will be in the description below. So make sure you stop what you're doing. He's very active on Twitter and LinkedIn, as well as he got amazing resources on energycapitalventures.com. That link will be in the description. So make sure you consume his content there. Again, Vic, I really appreciate you being on here. I always love to ask my guests before I let you go fully, is there any last words of wisdom they'd like to share with our audience?
Well, so first, Christian, thank you for having me. This was great. I really enjoyed it. I think for all the entrepreneurs out there that are in there grinding it out every day, trying to make the unbelievable happen, focus on your personal excellence, focus on developing yourself across every spectrum of your person, intellectually, spiritually, physically, in every aspect of who you are as a community leader, a family person, as a business leader. If you're developing yourself every day, that is what will make you a better leader. That's what's going to get you to the next level. So please keep it up. We need you.
Such awesome wisdom, man. I really appreciate that. My friends, that is the co-founder and the managing general partner of Energy Capital Ventures, Vic Pascussi III. Guys, that is Journey with Christian Evans podcast. Until next time, be uncommon if you can. Yo, this is Christian D. Evans, Journey with Christian D. Evans podcast. We thank you so much for listening to this amazing episode. If you feel and you know that this was valuable to you, please show some love to our amazing guest by liking this, by commenting on this, by making sure that you do a nice 5-star review and just show some love to our guest. That'd be really awesome. Also, make sure you share this with a friend, a family, a colleague, someone that you believe would bring value to their life right now. And guys, we just want to say thank you again for just being part of our community. If you want to have more resources, don't be afraid. Go to christiandeevans.com. You can actually schedule a phone call with me, or you can send me an email at christian.evans@beUncommonIfYouCan.com. That's christian.evans@beUncommonIfYouCan.com. Always love to hear some feedback and let me know what is the number 1 or 2 things that you are struggling in your business and your life, and we'll make sure we have those conversations. Guys, that is Journey with Christian D. Evans podcast, and until next time, remember, be uncommon if you can. Cheers.